So let's get into it for a second. This is a video partially to explain when somebody shows up on stocktwits and asks what is uvxy and what is Contango and what does it all mean. So let's get into it. All right. So welcome. My name is David, and I wanted to talk to you a little bit about Contango today. Now, Contango is a very simple thing. It is a relationship between two futures. So let's take a look for a second at the VIX term structure. Okay, uvxy and tvix and all of these VIX ETFs are based on the VIX futures, because there is no way to capture the VIX directly because the VIX is just an index. The VIX futures have to be used to trade the VIX. So right now, if you look at this chart, this is going to show you the VIX term structure. And what I'm going to do is make myself smaller and pull up the chart. So there we go. Okay, so now in this chart, for our concerns as far as our finance or our the actual money involved in ETFs, we are only concerned with the first 2 points on this chart, the first 2 dots on the left, dot 1 and dot 2, and here we go, dot 1 and dot, sorry, you can't see because it's in the way, dot 2. These are the 2 futures, and they are the only things that a VIX ETP is based on, whether it be tvix, uvxy, svxy, or vxx. They're based on these 2 futures right here. And most of the time, this chart looks like this, which is an upward sloping chart. Now, in real terms, what does this mean? Because we're looking out to the future. These are futures, so we're looking up to the future. So if you've got one future that's low and then farther out futures that are higher, that means that this is predicting that the volatility is going to be lower soon, which would be now, or 30 days from now actually, or however many days out till this expires. Now this one expires in 4 days, so there's not many days left on this one. So essentially right now, volatility is going to be cheaper predicted than farther out from now. So in a way, if you're short volatility, that's not good for you, because you would rather have it be predicting that volatility is going to be cheaper soon than volatility being higher soon, which is what this shows. And I believe that's what, when people say, oh, it's not great to be in Contango because it's predicting that volatility is going to go higher here, as opposed to when you're in backwardation, where it's basically predicting volatility is going to be lower farther out. So let's go back and look at we can look right here at a backwardation situation. This is from October 2008. Okay, in this situation, right now we're at 63, but it's predicting that later volatility is going to be cheaper. And in a way, if you're short volatility, you want to see it predicting volatility going to be cheaper later, because that means volatility is going to come in. And so in a sense, I think that's what people are talking about when they say, well, it's not so great to be in Contango because it means that volatility is predicted to spike at some time in the future. However, there's another side to this, and the other side to this is that we have been, when we're set up in this Contango situation here, every day all these funds get rebalanced, and what they do is they sell a little bit of the first future and they buy a little bit of the second one. So let's to make this easier to understand, let's change the numbers here. Let's say this one was worth 1 or 10, and this one was worth 20. So you sell $100 worth of futures. So you're going to sell 10 futures here, and then you buy that same $100 worth of futures back. So you're only able to buy 5 of these. So your your overall value is still the same. It's still $100, but you have less in the end, and the value in the end of your holdings is going to be lower. Another way of thinking of it is when you exchange the 1792 one for the 1810 one, you have more to fall, a more distance to fall to converge with spot, and that greater distance to fall turns into more money in your pocket as this falls down to spot. And the reason that although it doesn't mean a whole lot today because it's a sort of an inflection as we come back out of Contango, it is a turning point, and that's why it's so exciting for us. There was a great post today by my buddy Brent, and I'm going to pull it up for you here. And what Brent was showing was that we've had two, let's see, can you see that one up there? Okay, so what Brent was showing is in the last 2 months, we've had these is the top 14 longest backwardation streaks since 2004. And we've had 2 in the top 10 in the last 2 months. From February 2nd to February 22nd, 14 days we were in backwardation. And then from March 22nd to April 13th, 15 days, which we just came out of today, we were in backwardation. So that's a month out of the last 2 months that we were in backwardation. And if you look, these are all the time since 2004 that we've been in extended periods of backwardation. And it's not that many times. So this is pretty rare that we have 2 of the top 10 in just the last 2 months. So for somebody who came in and was thinking like, I'm going to get short volatility and have Contango work in my favor. Because remember, when things are in Contango, you're automatically losing a little value every day that it stays in Contango. And that hasn't been working in this extreme situation for most of, the last 2 months. Or, a significant period in the last 2 months, it hasn't been working in our favor in a real sort of anomaly as far as statistics are concerned. And so it really is cause for a celebration when we come out of this extreme situation today. And you could tell today when we did come out of it that this new structure of Contango was pretty resistant, because even with the E-minis at one point today down 10, 11, 12, we were still with the VIX down. So when you look at the sell-off this afternoon towards the close in the E-minis, let me get this going here. So this is this afternoon, okay? Things sold off all the way down at 3. They sold off way down here to 26.44.75. And so that was down like 15, another 15 from where it closed. So it was down almost 20 points in the E-minis. And the VIX still didn't go positive with the E-minis down almost 20 points. So vol was really coming in even with the market selling down today. And we ended up with the VIX down over a point. We've had several down moves recently. This is the VIX action in the afternoon, and we saw it spike back up and come right back down. But even with it going back up, it's still, it looks like it might have actually gone positive for a second, but just barely positive with the E-minis down 20, it looked like at one point. So really, vol really coming in heavy today. And if we look at our term structure, it's still flat, but it's got it's really come a long way in the last day or two. So if we look at our term structure here, and if we can hit wide, right, which flattens it out, and that really gives you the flat view, but even in wide, it still looks better than it did before. So from the bottom of where the spot is to the peak of these futures, you've got about a 0.60, right, a 0.65, 66 between the top future and spot 166. Now, it would be great if we could get like 4 or 5 points between the top future and the lowermost future, but still, it was flat within like 25 cents just a couple days ago, and now we've got a 0.60 between the spot and the top future, and even between spot and the front month future, we've got 51 cents. And so that's a decent, I mean, with 4 days to go, 51 cents that is a healthy amount for the difference between those two with 4 days to go. Now, these other futures, we'd love to have more space, but the structure has, it is looking healthy, and this is exciting for us. And if Contango does get up towards 10%, yes, with Contango at 10%, the chart is indicating that a spike will come at some point. But in the meantime, you're losing value by 10% a month, and that is a huge winner as far as these products decaying. And, yes, there's a possibility of a spike once we go into Contango, but I've stayed short through all these spikes, and I've weathered the storm. And if you've gone through all the spikes and weathered the storm, when it finally starts to pay off a little bit and you make some money back, there's cause for excitement. So I am excited. I did write Contango because uvxy is down several days in a row, and that's exciting for me. Let's take a look at uvxy over the last few days. So 10 days. So it's gone all the way from 22.50 down to 17.21. So that's a 5-point swing. In the last few days, which is great. I really won't be. I pretty much put this position on with uvxy around 16, so I'm still losing, but it's come back a lot. I would love to see this dip below 16. This is the 20-day here, and it can dip below 16. If we could get down to 16, 15 in the next couple weeks, that would be great. And it is possible. I mean, it doesn't take that much. Let's see what the VIX would have to do here. Yeah, see if the VIX can go back to 15. And if we can just get in Contango for a little bit, that would be really helpful too. But, it's exciting for me. It is significant that we've come out of backwardation into Contango, and allow me my excitement. I mean, this is the pain and suffering I've gone through with this thing recently. I mean, let's take a look at a 1-year chart. I mean, this is what happened last year, June, July, October, straight down, okay, until we get to, this is that February 7th thing. So straight down, straight down, straight down, and then this is what we've had to contend with the last few months. And that's been a painful, painful ride for being short. So, we've got a little dip down here, and it may continue, it may not, but give me at least the satisfaction to be happy for a little bit that it's made that little move down there. And, this thing, it does have a certain momentum to it, in that as the term structure goes from being in backwardation to being in Contango, the VIX moves down several points, a couple points, and of course, uvxy doesn't follow as many points as the VIX moves down, because spot is reversing the term structure, and so spot has to, the actual spot moves down a lot farther than uvxy, because it has to go to the other side, change the chart all the way around, and then finally, once the chart gets flipped around and back in Contango, then the futures really do start to have a much bigger beta to the actual VIX. So once we have a few down days and this term structure gets stretched out a little bit, then you really start to see momentum build. So this could just be the start of it here. If we can get a continued move down to like 15, that would be great. And then we don't even need it to really keep moving down as far as the VIX. If we can just stretch out the curve into contango of 5 or 10%, and then the VIX can just sit there at 15, and this thing will decay and work out great. So something to really be excited about here. Even looking at the VIX from this view here, let's widen it out a little bit. So stuff to be excited about this fall off here, and we're looking for it to continue. It is good to get excited sometimes. My friend Bob always says, if you're not too bummed out when you lose money, if you aren't too excited when you make money, you won't be too bummed out when you lose it. But this has been a money losing proposition for me for months now. And to get, uvxy down a point today, yesterday it was down, I think it was down another point, I believe. The day before it was down also. So it's been 3 good days in a row, which has been great. And so I am excited about it. It is something to be excited about. And so there you have it. So just to refresh your memory, if you're trading uvxy or if you're looking at it for the first time, uvxy is not based on the VIX. So seeing what the VIX moves is not going to tell you the story. You're going to look at the futures, and right now the main future is the second month future, so the May future, which is VXK8. It's the K8 future right now, which is so essentially, if you look at the move in the K8 future and you multiply that by 1.5 times it, so basically if we could say that future is down 60 cents, so you would expect uvxy to be down about 90 cents then. So 60 plus half of that would be 90 cents. And in this case, there's a little bit of that front month future, which was down even more. So that's where we get the down $1 here. Coincidentally, the VIX is down about $1, a little bit more than $1 today as well. So VIX close to the move of uvxy. Although you see the future is down less than the VIX. And the reason for that, once again, the term structure is adjusting to starting to move down. If we continue to follow through to the downside, you'll see these futures will pick up on their beta to the VIX. Anyway, just excited that we have gotten some follow through here. Did want to explain that. Did want to defend my excitement online, and somebody comes on and says, "Well, it doesn't mean anything that we're in contango." Well, it does to me. I don't know how else to put it. It does to me because it's exciting today to actually make some money back, and that thing that I showed. Let me go back to it just one more time. All right, so this is the post one more time, Brent's post, which shows the 2 periods of 15 and 14 days that we were in backwardation, which is extreme. Then I want to show you another post here. This is this is graphically, once again, Brent here, who might be shy for me showing his picture. But anyway, this is showing graphically. Let me make sure I'm not in the frame too much here. Yeah, I'm not. Okay, all the stuff below the 0 is us being in backwardation. You can see that big period in February where we were really in backwardation. And then kind of just a little bit in backwardation. And then us on the end here coming out of it. Love to get back in contango up above this line. And then the other one I wanted to show you is this trade here by William Earl. Okay, now this is a put trade, and it's kind of hard to see, but let me see if I can blow it up here a little bit. So he is buying the May 11/17 puts, although it's a spread, so I'm not sure why it's not showing it. I'll leave these naked for the time being based on the movement. Oh, I guess he's just bought that one put. I was thinking he bought a spread. Oh, wait, this is a different one. He did buy a spread. Let me find the other one here. Sorry about my lack of computer gymnastics here. Let's find his spread that he did, because that's a different trade. All right, so here we go. William Earl spread. So this is what he did here. He bought the May 2018 put spread for $1.41. So he bought the May 20 put and he sold the May 18 put. This is 4th of May. So let's take a look at it right now. So if you're buying a $2 put spread, okay, the most it can be worth is what? May 18. I think it, let me see which one it was. Hold on. So if you're buying the May 18-20 put spread, how much can that be worth at most? Well, let's see, there's $2 between the strikes, right? Between 18 and 20 is $2. So the most it can be worth is $2. So if you pay $1.41 for it, the most you can make is 60 cents. Okay, now I'm just looking at May. Okay, so it's 4 May is when it expires. So let's find that. All right, so what I want to do is get rid of all of these things. So we're going to clear everything. So let's look at the 4 May 18-20 put spread. Okay. So if we buy the 20 put, so if we buy the 20 put for 380, and then we sell the 18 put for 187. So right now worth 149. And essentially, this put spread, as long as on expiration we're below 18, it'll be worth $2, right? And right now we're at 17.21, so it's worth $1.49 now. So if uvxy stays here until expiration, it's going to gain 50 cents and go out at $2. So midpoint right now is 149. So this was a little bit higher when he did this trade, it seems like a good bet to me, because as long as we stay below 18 by expiration, the spread will be worth $2. So if you buy the put spread for, let's say, $1.50, you're synthetically selling the call spread for 50 cents. So it's pretty much the same thing. If you bought this for 149, you're essentially selling the call spread for 51 cents, because $2 minus 149 is 51 cents. So decent trade. Once again, if we get a spike, this could go above 18, but if we continue along the path we're taking right now, this could be a good trade to collect that 50 cents. We've got 21 days to go on that one, so that's an interesting trade, and we'll see how that works out for our friend. the trade that I have on, well, one of the trades I have on here is I have bought these June 12 puts and they're worth somewhere around 50 cents right now. And I had sold the 8 puts against them, although I covered those. So I've got 63 days till expiration, and it's the 12 puts, so pretty far out of the money. I'm $5 away on them right now, which is pretty significant. But I don't necessarily have to get to the strike for me to roll these or do something with them. And definitely looking better with this having moved down $5 because before they were $10 away. Now they're only $5 away. So looking a lot better on those puts. Interestingly enough, with this back up around 21, the puts didn't really move that much because volatility was so much higher in the implied volatility of these options when uvxy was up there. As this sort of creeps down towards 17, the volatility really comes in and they crush the volatility on this stuff. But, in a sense, either it's going to get to the strike or it's not. And my plan right now is just to hang out, and if we can get closer to the 12 strike, then I may roll them into September. Let's take a look at SEP puts right now. With 161 days, like the SEP 12 puts, you could probably get for like $2. But maybe like the SEP 10 puts might be able to get, or the SEP 9 puts, which are pretty far away. But it kind of all is contingent on us, once again, as I said. If you move back into Contango, then this thing starts to decay at 10% a month. Okay, 10% a month with a stock, with the ETF at 17, that's $1.70 a month that it's losing. And that helps you, along with volatility. If it's not likely that it goes back to 10, but it could go back to 15 pretty easily, in my opinion. And that's what I'm sort of counting on. I hadn't really, when I put this trade on, I didn't really think that we would be in an extended period of like 20 in the VIX. I hadn't envisioned that at all. And I didn't envision also the deleveraging of this product. So there were several things that went against me on this one. But, that's what trading can be about sometimes. Anyway, those are my thoughts for right now. I know I'm not the only one who's pretty excited today. It was a nail biter down to the close, and we weren't sure if we were going to even end up in Contango because it got real close with these futures at the end. Even with spot, 50 cents below the future, it was very close between the two futures. It was only in Contango by like 15 cents, 20 cents, somewhere around there. But it still counts. And we kind of track it by what it closes at. And I always say that Eli Vince is the final word. And he indeed did call it today that we closed in Contango. And I will show you that tweet just out of just to dot my I's and cross my T's here. Let's see if we can find it here. All right, here we go. There we go, April 13th, which is today. VIX futures Contango set at 1.12. Finally, some Contango. Let's see if it lasts. There's a small headwind for VXX and UVXY holders. Now, I had the settlement prices at $1.92, and I had it as 1.0%, but that doesn't really matter. I'm just being nitpicky here. Let me see what futures prices I had, because there was only one settlement prices. So I had it at slightly different prices. And I'll just pull that up real quick. Okay, so I had it 1792 and 1810. So 1792, so that would be 18 cents over 1792. So 18 cents divided by 1792 equals 1.00. So I had at 1.00. So I'm not sure where he's getting 1.16 or whatever, but it really doesn't matter. It's all the same thing. It's 1%. He has 1.12. I have 1.00, which is, like I said, pretty much the same thing. I'm just being nitpicky, but exciting days for us indeed. And I'm gonna thank you for watching. Have a great weekend. And this gives people something to think about. I saw something on CNBC today about how this guy saying the VIX was too high. Let's hope these long premium guys choke on their premium a little bit over the weekend and come in Monday thinking about just getting out of their puts in the SPX so that we can further capitalize and this vol crushage continues. Exciting.